Don't scroll, it's story time. This is probably the most ridiculous case I've seen in my entire career, and I doubt anything is going to top it. This was when I worked at a previous firm, and we had a client who was selling their business for around $50 million. In doing the due diligence for the transaction, our team picked up that there was an unclaimed tax deduction of around $10 million. In company tax terms, that was around $3 million because it went back over 10 years. Now, stay with me here. This is really technical, but it was part of a very special rule in the tax consolidation regime called rights to future income. Now, these rules were only in effect for about a 10-month period because the banks started consolidated with rights to future income, i.e. mortgages, and claiming massive tax deductions, like in the multiple billions. So when the government recognised that these rules weren't working right, they just cut them off. But for 10 months, they were law. And if you consolidated in that time, you could get under those rules. Wouldn't you know, the client that we've got consolidated in that time and never did any of the tax compliance required for consolidation, including checking whether they qualified for $10 million of tax deductions. So this was about 4 months of work for me and a couple of team members, and we were briefing valuers. And then eventually, when we did all the foundational work, we had to get an assurance letter from the ATO. That was because we were selling this company. If we just amend the tax returns to include $10 million of refunds and then they get audited because what the hell is going on, then the buyer is going to have to pay that and then chase us under a tax indemnity, which they, of course, don't want to do. That's super annoying. Anyway, so we collated all the stuff that we did. So we got formal valuations from, top-tier valuers. We got all this stuff done about what was going on at the time. We reconstructed stuff a decade later than when it had actually happened, and the record keeping was pretty crap. Presented it to the ATO, and I remember because it was just before the Christmas party. 2 weeks after we submitted it to the ATO, they came back with a, yes, this looks good, and they gave us a formal letter to that effect. So you can appreciate the size and scale of this. The $10 million deductions was worth about $3 million plus interest, so it's about $3.5 million at the 10-year period. But the legal fees to actually get that done were about $450,000. It was a significant undertaking, and frankly, it was a unicorn set of facts. I'll never see this again in my whole career. But if you have consolidation between 2009 and 2010 with contractual rights to future income, holy crap, give me a call because we're going to go make some money.